Get ready to embark on an economic journey as we unveil the heartbeats of the Rwandan business landscape. This is the Business Age, your front row seat to the economic renaissance of the land of 1,000 hills. Join us as we traverse the bustling markets of Kigali, delve into the success stories of Rwandan entrepreneurs, and explore the dynamic forces shaping the nation's economy. From the boardrooms to the street vendors, we'll bring you the voices of the visionaries and the minds behind Rwanda's economic evolution. Discover the fusion of tradition and technology, witness the agricultural innovations transforming rural communities, and explore the cutting-edge innovations propelling Rwanda into a new era of economic prosperity. From the city lights to the rural landscapes, every business is a story waiting to be told. Hello there. Thank you so much for tuning in to today's episode of The Business Age. You'll be with me, Naringwa Fiona Mothoni. On today's edition, we focus on the credit market here in Rwanda. We'll be speaking to Rwanda Bankers Association and we'll get insights from the National Bank of Rwanda.
In recent years, Rwanda financial sector has undergone a remarkable metamorphosis. We have witnessed the rise of digital platforms that put banking in the palm of every Rwandan hands. We have seen the emergence of fintech startups that challenge the status quo and the evolution of regulatory framework that strive to balance innovation with stability. However, our journey is far from over. The credit market is the engine that powers dreams, enable entrepreneurship, and fuel national development. Yet, despite our progress, too many Rwandans, MSME, still struggling to access the credit they need to grow. Technology is not just changing the way we bank. It is changing who can bank. Today, a young entrepreneur in Musanze can access credit with a few taps on her phone. A farmer in Huye can receive instant payment for his produce thanks to the mobile banking services. Fintech is democratizing access to finance, breaking down barriers that once seemed unsurmountable. However, technology alone is not enough. It must be harnessed wisely, guided by regulation.
The main purpose is to discuss about the credit landscape. When you try to see the SMEs, they count for 90% of private businesses in Rwanda, but they still struggle a lot to access the credit. They need money to run their businesses, day-to-day businesses and operations, pay invoices, but they struggle a lot to access loan from banks. Only 23% access loan from banks. And we said now this is a good time to discuss about this, to bring people together to discuss this challenge and find the next way forward.
Okay, very interesting. And now, just even looking at the Rwandan market in itself, fintech solutions have been increasing. We've seen different solutions being brought by entrepreneurs. But in what tangible ways are these innovations expanding access to credits when you're looking at the gaps that you've even mentioned?
Yes, thank you for that. When you try to see the rise of fintech, we believe that the fintech is bridging the gap. Before the rise of maybe more cash, let's say more cash or other mobile lending platforms. Now, I would say fintech is increasing the financial inclusion in a manner of making the time to credit or lending very shortened. When you try to see the traditional banking processes, it requires a lot of requirements, either collaterals or high interest rate caps. But the fintechs are really shortening the process and also increasing the credit access to many people.
Over the years, even as you've touched, we've seen digital lending has increased. We're also seeing a mobile money, also has bridged the gap that we had within the market, not only in Rwanda, but across developing markets. It's really coming in to bridge the gap. But one question is, when you're looking at these tools, are they really coming to be a solution? Or when you're looking at digital divide, to what extent is it inclusive when you're looking across, even in rural parts?
Yeah, you're very right. Mobile money platform and other digital platforms has come to bridge the gap. But it's also an area where we need to pay attention, especially on the regulator side, because we can't afford also seeing this technology coming up, but also bridging, increasing the gap or excluding some people. So there's a need of education and awareness in terms of those banks or fintech companies or innovators to make sure that they put people at the center of their design. During the design, how is it easy to use those products that they're designing? And also consider even those people in rural areas, like old people, based on literacy. So how is it easy to use those mobile platforms or other platforms that are coming up, even for those people who don't have smartphones? So it's just a matter of ensuring the literacy and education awareness, as well as putting people at the center of every design that they're designing.
Innovation is coming in at a high speed, but we're seeing also traditional banks. They're also taking their time when it comes to adapting to some of these emerging tools that are coming up. How would you say traditional banks can adapt and stay competitive with these emerging fintech solutions that we're seeing rapidly? Is this even a concern?
Yes, it's a very big concern, because there's some saying which goes like banks and fintechs are really partnering, or they are competitors. But I see a way of cooperations. Traditional banks can really stay competitive by ensuring interoperability with all these technologies, because fintechs are not coming to compete with the banks, but they're coming to be kind of a distribution channel, if I may say. So banks can really work on the back end in terms of liquidity and ensuring regulations, but also now put fintechs in front to face the customers, to bring those platforms or to channel the distribution of money. So I think interoperability and cooperations between bank and fintech is really a plus, and this will also ensure an innovation and brilliant ideas to increase access to credits.
It's more of collaboration, as
Yes.
you said. But now when you're looking at the bank's side, there's also demand from the consumer side for more innovative platforms. To what extent are you seeing the traditional banks themselves actually even coming up with more product offerings? And would you say that the pace in which they're also introducing the new products is as fast as the demand side?
The way technology is moving very fast, banks are not really moving as the technology or consumer demand is moving very fast. So if we look at the way maybe like this AI and other platforms that are coming up, like everything is changing as a blink of the eye. We see tomorrow something has arisen, something else has arisen. But banks also are taking a cautious business models to make sure that they're not putting people's money at risks or at stakes. But on the other hand, banks are really innovating. Banks have revisited their business models and business plans, because when you try to see a lot of products that are coming up, they are really putting people being customer-centric. There's the rise of POS, there's the rise of mobile lending, also even by the banks. There's also some other fintech innovation being brought out by the banks. If you hear about collaboration between one of the commercial banks and more cash or spend, so there's a way banks are really engaged in and innovating to ensure that they are not lagging behind.
What would you say are some of the main regulatory hurdles first, especially when you're looking at integrating the new tools, also the credit system here in Rwanda?
Yes, I would say that first of all is there's a need of standardization from the regulator side, because when the central bank and CMA established the sandbox, the main purpose was to ensure that those innovations are really catered for and then tested in the real market before being integrated in the market so that they can avoid risks. So, but to what extent those innovations or those fintechs that went through the sandbox are now really integrated with the banks or MFIs or insurance? So that's where the issue comes in, because maybe if the central bank give now a license to that fintech, but now the fintech struggle to cooperate with the bank, that's where the issue comes. The banks say go back and bring this, and then the central bank send them back. So I think there's a need of harmonizing those integrations processes to ensure that fintechs are really, like, we are seeing the impact based on what they have established. Second one is, Rwandan banks are really highly liquid. But when you try to see the provision, how does that translate to credit access? It's not synchronizing. And you wonder where is the issues. Banks have money. When the capital adequacy ratio is now at 22%, while the minimum requirement from the central bank is 15%. It means bank has excess liquidity. They have money that they can lend to the people, but why are they not taking that risk to lend? So that's where also regulations need to come in, maybe provide some incentives, also revisit some policies that have established, like NPA ratio, which is at 5%. Now Rwandan banks are at 3.1%, but what would happen if we say, let's have an NPL at 7%? So I think there's a need to avoid siloedness of the systems, and then bringing stakeholders together and to discuss on those issues.
Let me start by providing a definition of financial inclusion. We define financial inclusion as access and usage of affordable financial services by all people and businesses. When I say by all people and businesses, it includes even micro and small businesses. So, and we've made tremendous progress as a country for the last 16 years, because we first did the FinScope survey that measures the level of financial inclusion in 2008, and the level of formal financial inclusion, that's people, adults that access and use financial services from regulated financial institutions, were at 21%. And last year, 2024, that number increased to 92%. So that's a tremendous progress. But then as policymakers, we try to understand, to digest this level of financial inclusion. And what we observe is that we've made tremendous progress on access. That's one element of financial inclusion. But there is another element of usage. Because there is access, thanks to mobile money, now very many Rwandans have at least an account. It can be a bank account, a SAC account, or a mobile wallet. So now the second level, the second phase of financial inclusion that actually we are going to put more efforts is on the usage, because ultimately that's what transforms people's lives. People need to borrow, people need to save, to invest, expand their businesses, innovate and create jobs and transform their lives. So that's the next generation of financial inclusion that we want. We used to point fingers at financial institutions that you're not doing enough, but benchmarking and try to read and try to understand financial inclusion, we realize that actually financial inclusion needs a coordinated effort. It's a coordinated effort and needs interventions from different players, because financial markets are comprised of very many players. The first player, people and businesses. Then the financial service providers that actually do financial intermediation. The money they lend, they get it from people. Then the other player is the regulator. You have the people and businesses, you have the financial service provider, you have now the regulator putting in place standards, and then the government providing public infrastructures. So if for a good financial inclusion and effective financial inclusion, we realize that actually the interventions across all the stakeholders that I just mentioned. And now on the innovative products that you just mentioned, indeed, there's need for innovative products, because people need financial services, and I always tell financial service providers that one indicator as to why we have room to grow is the existence of what we call bank rambere. Bank rambere, people borrow in the informal sector. They are charged, very high interest rates and, pay back. And there is a borrowing need. And maybe some products don't meet their needs. So how do we try to understand the needs of people? So a key enabler, a key ingredient in understanding the needs of people is data. And one barrier to financial inclusion is something we call information asymmetry. Information asymmetry is, to explain it to you, is that, these lenders have no information on the borrowers. And the money they are lending is money for people. Central bank, we're in charge of financial stability. At one point, we were telling the lenders, give money where you think to, be paid back. And so deploy money where you think it's a very good project that, you have the returns and, be able to pay back the depositors. At the same time, we wear a financial inclusion hat. We are saying you're not doing enough financial intermediation, lend enough. But we are careful in saying that. We don't say that just lend, because that was actually the main trigger of the global financial crisis. Telling lenders to lend, have lax lending standards and just lend, because ultimately if the projects where they lend to don't pay back, then you have a financial crisis. It's going to stop lending forever. So we are very careful in terms of the interventions we make and advise in terms of unlocking and driving financial inclusion. And one thing that we are addressing in partnership with government is addressing this issue of asymmetric information. The lenders have no information to who they are lending to. And this is due to some informality of the economy. And this we are trying to address thanks to the digitization of the economy. There's data footprints. You're talking about people, lenders, getting data from CRB, and CRB is about a database of people who have borrowed before and been able to pay back. But there are people who have never borrowed, but have businesses and they have cash flows. They have been using mobile money. These are women selling fruits. There's cash flow ongoing on their mobile wallet. So that's data that is not captured. So the challenge we are giving ourselves, the regulator working together with other government players, how do we tap into these digital footprints, the data, and now work with the lenders? Because this is what we call a data public good. When there's a word public, there's government that follows it. So you can't ask one financial institution to provide this data, to address this asymmetric information and provide data. So there has to come a public entity like the regulator to bring together this database and enable the sharing of data. Now the lenders can innovate, because if you're developing a very innovative product, you need to understand, is it innovative enough? Is it what people want? So what people want can be got from the data. What you want, the restaurants you like, can be uncovered by tracking, Fiona, which restaurants you've been going to, and that's you. So the definition of what people want lies in the data. So how do we unlock this data, bring it together, enable data sharing? And now the lenders will be able to use this data, develop insights from it, know what people want and lend. So that's one thing that we are working on. Of course, along with many other things like financial education, addressing the illiteracy aspect. But asymmetric information is very key, and we are trying to address it.
To what extent are we seeing the regulator balancing the need for innovation with consumer protection as well, and financial stability, and also how are they also keeping up with the demand of the market? Like, for example, we saw the central bank came up with the sandbox. How are you seeing regulators balancing the need?
I would say regulators are really doing great, because innovation is moving very fast. I would say that there's very high volatility of these emerging technologies that are coming up, a lot of ambiguities, and But our regulators here in Rwanda are really following innovation, because you can't really regulate something that we haven't seen. So regulations are really following innovation. But they are also ensuring, as we said, this establishment of sandbox and other guidelines that have been launched, like fintech strategies. They are all in place to ensure that we are not risking or we are not destabilizing the sector. So that's where regulation is I think there's a need to strike the balance between innovation, but not compromising the security and the risks that might arise due to those kind of innovation. And the central bank is doing so.
Yeah, and also going back to your earlier point of we're seeing banks, they're highly liquid. We're also seeing the non-performing, the NPLs, the ratio is relatively low. But now also comes to ask the question, what is still the missing link in the credit value chain that keeps MSMEs in particular locked out, knowing how much of an economic driver they are?
I see the issue in twofold. First of all, on the demand side, and also some portion on the supply side. When you look at the MSMEs, to what extent are they ready, or their business really bankable? Because again, we have to also think that the banks are using people's money, because 48% of banks' assets are just deposits. I mean, though, the assets of the bank are not deposits. They're loans they lend and other micro loans or overdraft. But a high percentage of also liabilities include deposits. So those are the money that they rent to earn interest rates. But when you try to see how banks are lending, it's not synchronizing, as we said. Now, this is where we maybe think, why banks are not taking risks? Or is it an issue of skills to analyze those projects? Or is it an issue of regulations that are tight, hindering them to lend? But as we said also on the demand side, we also need to train those SMEs to fit the requirement of the banks in terms of preparation of those documents that are required to ensure the income statements or other balance sheets are really recorded to prove to banks that they are ready for the money.
What led the Central Bank of Rwanda to feel the need to establish a regulatory sandbox?
So there has been an ever-present conversation about the relationship between innovation and regulation. The argument was, do people innovate first and then innovation follows, or which one comes first? And really, at the end of the day, it's not about which one comes first. It's about creating an environment that really boosts innovation, because it's through innovation that we get several benefits for the regulator, for the clients, the customers, the people that we serve, and for the market. So regulatory sandboxes are part of those responses that regulators have put in place for innovation. There are many approaches, some more proactive, others less. For example, regulators could choose to just let innovation lead and then they watch. But also some regulators do choose to put in place facilities like regulatory sandbox. So it's in that angle that the National Bank of Rwanda created a regulatory sandbox. So you asked, what is a regulatory sandbox? So it's a regulatory facility. When I say a regulatory facility, what I mean is that it's established by means of regulation, and it provides flexibilities in terms of regulation. That is opposed to, for example, a technical sandbox that would provide you technology to test your solution. So we provide regulatory flexibilities to test a solution.
Okay, very interesting. Can you provide an overview of maybe how the sandbox operates and its key objectives?
Mm-hmm. Yeah, so the BNR regulatory sandbox was established by a regulation we've put in place in 2021. And the regulation establishes what is our scope and what is the eligibility criteria, what is the process for approval, and what is the outcome that we want. So one, the scope of the BNR regulatory sandbox, we serve institutions that are within our regulatory powers as BNR. As you know, the market of Rwanda, the financial market, is regulated by two institutions, the National Bank of Rwanda and the Capital Market Authority. So our scope is strictly the institutions that bring solutions within our regulatory scope. We also have an eligibility criteria that is quite different from other regulations. We look at three main things. One, we are looking for genuine innovations. How do we find genuine innovations? We ask ourselves, what solutions are you bringing to the market? Are you solving for particular pain points? It could be policy pain points, it could be market pain points, but are you solving for something, for a real issue in the market? Secondly, we look at readiness to test and deploy. At the end of the day, regulation is one piece. You also need to gather governance, capital, and some funding to be able to test. So we also look at that, readiness to test. We receive applications on a cohort basis. So we do 3 cohorts a year. And on top of that, we conduct many sessions with innovators to support them to get the applications ready, to understand their regulations. So overall, that's how we operate the sandbox.
Would you have recommendations per se, or even looking at best practices that we've seen from other markets that could be applied here?
Yes. First of all, I would say that African context is different. It's different from those developed countries. And maybe my first recommendation would be to look at our regulations. Does it really fit the African market or even our developing markets? Because we tend to be strict and follow those regulations like Basel 1, 2, or 3, even 4 is coming. But to what extent are our regulations, our regulators are really presented during the design of those regulations? But the second thing is also to look at also innovations. Increasing the interoperability is really something that should be enforced, because this is where we see where banks cannot reach, fintech can reach there. That's where we're saying distribution channel. But also for the businesses applying for credits or fintech. From the conference, we expect policy recommendations, because having policy regulators or having even those development partners, having those banks, fintechs, MFIs, insurance, all in one single roof, it's a way of provoking conversation for these emerging trends or challenges, and then find a solution. Second, we issue what we call working paper series, which combine all papers that will be presented during the conference. And that's where researchers has come to do different analysis of the market, and then recommend some things or strategies that can be adopted. The third is also we expect like collaborative or partnership discussions during the conference and after the conference, where some fintechs struggled to approach some banks. This is where it's going to happen.
Looking at the future, what are you expectant about? What does the future look like for Rwanda's credit markets in like maybe 5 to 10 years from now?
Yes, 5 to 10 years, Rwanda's credit market is really going to be inclusive and innovative as well as sustainable, in a manner of integrating technology, harmonizing our regulations, and then more cooperation or partnership in the space. So we see credit access being accessed in minutes or days, not like months or as it takes long time or many days nowadays. So yeah, in the nutshell, I think the Rwandan credit market is really going to be inclusive, many people brought on board. And when you try to see those MSMEs, gigs workers, freelancers who struggle to access credits, now being able to access credit with these credit scoring mechanisms that are coming up and bringing them on board in a way of avoiding the divide. One of my policy recommendations maybe to look for is if the central bank or regulators can provide some incentives to banks who are lending in some kind of sectors, because when you try to see the SMEs struggling to access the loan, but what are the incentives available to ensure that banks are motivated to even lend more, to take more risks? but also thinking of maybe the national credit guarantee schemes. Why not? Because it has been happened somewhere, and we can look where it has happened and then become successful and benchmark on the best practices. One more thing is also bringing people, different kind of people on board during the draft of different laws or policies. Like now, there's a feasibility study of open banking or open finance, which can really be a game changer. But also we need to ensure that all stakeholders are brought on board, share ideas to make sure that what is really being done is inclusive enough and including everyone on board.
Thank you so much for tuning in to today's episode of The Business Age. That's all we had for today's edition. My name is Naringwa Fiona Muthoni.